Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be a slightly different video to what most of you are used to. We're going to be bringing up one of the first charts that I ever presented on YouTube. Now, the video is still up there. If you guys scroll right the way back to the start of my channel, it was just after the March 2020 crash, and we came out and we made this sort of, outrageous call that despite what had took place in March 2020, and why markets crashed, that we were actually going to still see an epic bull run. And that's because we were believers in something called the Bitcoin 4-year cycle theory, which this chart is illustrating. So we're going to do a number of things in this video. I want to be giving a warning because I really do believe we have a technical target that takes Bitcoin down to $13,822 dollars. But if you look at prior cycles, we're actually not doing too much different from what we did in 2018 before we got this slam down right the way down to 3K. Everybody was calling the bottom here in 2018. You guys will know, if you're regular viewers of mine, that I got into the crypto space in 2017, did well off it, but of course held, I have a very vanilla story in regards to crypto. I feel like many people share that story and that interaction. The difference between me and lots of other people was I actually stuck around and became a real beneficiary of this technological revolution that I believe we are in. So what we're really going to be doing in this video is taking a look at the Bitcoin 4-year cycle theory, maybe asking the question, are we still following it? Because we kind of are in many ways. We're sort of playing out in a 2018, 2014 style. And does that mean that we're going to continue? And of course, we can't talk about the Bitcoin 4-year cycle theory without addressing what causes this 4-year cycle. And it's really the halvening. It's where the, very correctly named, where the supply of Bitcoin gets essentially halved. So there's half as much Bitcoin hitting the markets. This has caused these kind of boom and bust 4-year cycles. We know, and we preach about it every single day, that really it's the macro driving everything. For those of you guys that aren't regular viewers of mine, it's well worth hitting that subscribe button and staying up to date with my daily cryptocurrency market updates. Go and watch today's one. We cover everything. We don't just cover crypto. We do cross-market analysis, as you really need to be a cross-market analyzer to kind of navigate these waters, because we're really moving off of liquidity. Liquidity is this constant subject that we bring up, and we can even apply it to this chart. If we look at the USM1 money supply, really markets have just, or liquidity, the money supply is just inflated throughout Bitcoin's entire existence. We're now in a period where, for the first time really since Bitcoin, came about in 2018, we've just had QE, QE, QE. We're potentially looking at a kind of shrinking of that supply as it needs to go into debt markets. And we think that paints a very bleak picture for risky assets, risk on assets like Bitcoin, like the stock markets. Why the correlation is there. We're moving very much in sync. We kind of always have, but not in this kind of symmetry. It's kind of amplified now because, of course, we have lots of the same players that we have in the crypto space from the sort of traditional financial world. But this is going to be just really a video about my thoughts. This is no way a prediction video. I'm just looking at where potentially I think Bitcoin could go to. Doesn't have to follow this 4-year cycle theory, and I'm not calling for it to do so. We have targets around about 14K anyway. But if what essentially is taking place here for Bitcoin is what I think it is, if we are, and we'll drop down the time frames here, guys. If we are essentially, we don't need the 1 hour. If we are essentially doing, and what I'm calling for here, we've got this as a head and shoulders. Okay? We've done lots of TI on it. This head and shoulders target, and it doesn't have to be a head and shoulders, will take you down to 13,822. But what I'm actually looking at the moment is I'm seeing huge similarities between this price action and this kind of floor that we're maintaining for now. I think it's absolutely going to break to what took place back in 2018, before we had this real spill to the downside, taking Bitcoin from around about, if we look at the consolidation range, 6.5K, half Bitcoin's value essentially. Are we potentially going to see something similar take place? Well, that's what we're going to be talking about in this video. This is why I said there's a real warning to what I'm saying here. And also it's very interesting from a sort of, if we're trying to predict the future, which is easier said than done, you know, certainly in this kind of an uncertain time, you know, it's very easy to call what direction markets are going if your liquidity tap is turned on and the money supply is inflating. It's natural that the asset that is priced in that money is going to inflate in terms of the amount of dollars needed to buy it. Whereas we're now living in a very different time. From March 2020 onwards, I believe the world fundamentally changed. We see this in the bond market. And of course, I think that's going to have a knock-on effect in the crypto market and potentially mean that it follows the 4-year cycle theory to less of a degree. However, there is no doubt in my mind, through basic supply and demand, that there is going to be a demand driver and a supply, you know, destructor in regards to the halvening, and this is going to have an impact on the price. I still think, and remember, the Bitcoin 4-year cycle theory is really just driven off the halvening. You know, the halving that we had that took us, and this is why we were calling for, even though we had seen this huge capitulation, you know, the world was ending, we still came out on this channel and said, look, you are going to enter a bull market and it is going to be spectacular. And it indeed was. We called out many early altcoins. You know, we even took part in lots of the airdrop for early altcoins. And certainly we were early invested in things like Chainlink. You know, we've been in Ethereum sub $100, etc., etc. So the last halving that we had was on May in 2020. So just after the March sort of 2020 capitulation event. The prior one to that was in 2016, around about July, and the prior one to that was 2012, of course, in November. The next one that we are looking at is going to be between February 2024 and July 2024. So is it potentially possible that maybe, and we're going to talk about the sort of, you know, the fact that I think we're in a 2018 danger zone before we get that spill. I think it's very prominent and likely to me that that's going to take place. Doesn't have to happen. And if what I'm saying upsets you guys, you probably shouldn't be in markets. You can't just always see the bull case. I am unbelievably bullish on the crypto space, but I think we have pain to get through before we come out the other side of it. You know, the grass is going to be greener once we've gone through this sort of a challenging time period. Ultimately, I'm extremely bullish on the fiat systems that we have being totally unsustainable, inflationary by nature because they're debt backed. We're seeing debt capitulate. We're seeing the sort of fragility of the fiat systems really unwind, and it's really why Satoshi's vision was a very real one from 2008 onwards, and we've essentially seen everything that he predicted, the continuous devaluing of currencies take place. It's why Bitcoin's got and hit 69k. But we're in this kind of restrictive rather than expansive time period, and I think we're going to suffer as a result of that as a market. Doesn't mean that I don't believe in the vision. Again, nobody is more bullish on the crypto space than I am, guys. So if we just take this and maybe, you know, overlay it, is it potentially possible that we play out in this kind of a manner? Nobody knows exactly how Bitcoin is going to play out, guys. But, you know, does this give us some sort of a benchmark to kind of go from here? Do we play out in this kind of a fashion? Potentially. You know, and I think both of these scenarios see further downside. The real worry for me is that, you know, and this would be into the halvening. Now, of course, you have to have a number of things take place. This bull run was extremely supported by the M1. So this is probably a better chart to actually show you guys the money supply on, because you can see the money supply has essentially just gone up throughout Bitcoin's entire existence. We've never had to go through this sort of turn and real liquidity scarce event. And people go, how can you say liquidity scarce? Look at how much they printed. Well, if you understand the debt markets, you understand why the dollar's got a bid up, you understand where liquidity is now going. It's getting taken out of assets to serve at debt. You've also got inflation, which is extremely demand destructive. So money's coming out of markets from two angles. Markets certainly risk on, very high beta markets getting killed as a result of the situation going on. And that situation is actually set to get worse, not better, if we continue on the path that we're on. And I think what's actually going to divert us from this Federal Reserve hiking cycle and, you know, this sort of liquidity destructive period that we're in terms of, you know, not inflating the money supply and people having to come out and act really tough. And, you know, they know the system. All central banks have got their back against the wall right now. They either obliterate their currencies or cause systematic failure to the debt markets. That's their two options, and both are bad. What I think is more likely is they cause systemic risk and actually failure in certain areas on a serious level. We saw this the start of this with the Bank of England, and then they essentially have to pivot as a result of that. So for me, there's no perfect bottom indicator. I'm just saying, I think for me, Bitcoin's going to 13,800. But if you look at, where potentially technically we could come to, 12K is a big one for Bitcoin, and that would kind of tie in with what we did in this consolidation period before we saw that downside. Also, if the Fed and everybody flipped their narrative and said, okay, we're not doing this, we're just going to go with inflation and we're going to proliferate the money supply and make it completely worthless, which is, kind of where I think things go after they break something and we see that systemic failure. They have to undo things and just continue to proliferate until people get fed up of it. But if we saw the Fed pivot, we saw them take interest rates back down to zero, and we saw them start to inflate and stimulate again, we'd be straight back bullish on the markets. So it doesn't need to even play out, and we don't even need to wait for the halvening to be bullish again. But this is more of a long, drawn-out period. And the reason I did this video was because, for me, guys, I'm seeing huge amounts of similarity with what took place here and where we currently are. Can you see how we kind of create this floor here? It very much seems to me like what's essentially taking place is the longs are filling the big players' shorts. So what I mean by that is that every long that takes place here, one reason we're kind of in this range-bound environment is because you have just as much equal sell pressure. When you end up in a range, there's a couple of things that are taking place. Either the buy pressure and the sell pressure is pretty equal, or there's just no interest. And we're already seeing this in very small cap altcoins. So it's very worrying that we're doing this. This is not bullish, guys. And we've not been very popular. You guys will know that watch me regularly. This is where we were essentially looking to exit the market. Up here, around about 44K. I've got a pinned tweet on my Twitter. We were alerting everybody to this, and we've been absolutely slated for it because we were essentially massive bulls from after March 2020 onwards, and we were late to the party. We didn't get out at 69K. We actually got out of altcoins quite a bit later than we were looking to get out of Bitcoin. But essentially, because of how bullish we were in a bull market, people have got this notion that you can't switch and you can't change your narrative. Guys, you don't want to go down with that ship. Let me tell you that right now. We're still unbelievably bullish on the crypto space. However, we think there's turmoil to go through before this technology really comes into its own. It's dancing to the macro tune, and until that situation changes, we have to adjust. And if we were still in and I can't see this, that they're going to continue to tighten for this long and really restrict everything, and we're going to be in this really dark, deep depression for all this time period, then this halving would have a less of an effect. I think it would still have an effect, but a less of one. Really, this is based on the halvening and moving the supply of Bitcoin. We know the entire market still really follows Bitcoin. If Bitcoin goes down, everything does. A number of reasons for this, algorithms and bots being a big one. But there needs to be also conditions met. So really what we're trying to do here is we're trying to look for a bottom. And if we look at this drop here, where did you rest? And if we take it off log, it was really after your first breakout. So you consolidated here, and it was really, you came down and you sort of rest in this period over here. Again, you can see a similar thing actually with here. It's really the first breakout, the first real area. And if we put volume by price over here, you'll see huge amounts of volume here. If we do it for Bitcoin, since here, where's all the volume at? And we'll just do this next. From March 2020 onwards, where did all the volume occur? Oh, what are we calling for? Potentially 12K. Maybe. Doesn't have to happen. You can do the same thing. What we'll do is we'll just take the bottom of the market here to the top. You often come back to points of volume because it's where that kind of pain factor is. So if we take the bottom to the top, the bottom was actually a lot lower here. But that's because if you look at this sort of period of consolidation, you can see just how drawn out it was. And here was this real kind of first breakout period before you saw that continuation. So it's still lower down, but this actually takes us to round about where we think potentially it may go, this kind of pain point. I think essentially markets are officially in many ways from March 2020 onwards were just pumped. Everything went up, guys. You know, which kind of made me question the Bitcoin 4-year cycle theory. But I still think there's going to be an element of this cycle alive. You know, forget Plan B stock to flow. That was complete and utterly destroyed. And that basically took gold's model of stock to flow and applied it to Bitcoin, you know, and you sort of have to play around with the formulas. That's been completely debunked. And the reason for that, there's a number of reasons for that. I don't think it was ever really going to play out. And I think largely it had been kind of, you know, almost fluked to date, and people weren't really addressing the macro situation, which is a mistake we made in November. You know, we'd have been out of markets in November, going into the start of the year if we had really paid more attention. We won't be making that mistake again. But back to kind of what I'm talking about, because I'm kind of rambling on now, is I really do think that it's very likely resting here. And if you look at this, we'll get rid of the volume by price. If you look at this in terms of price action, you know, investors out there will know this, right? When you're looking for a chart that's going to break out, you don't want price action above it. So prior price action, you don't want that, because that will often act as resistance. It's why when we broke this, all this prior historical price action, we erupted. Whereas you'll notice the grind to get there was filled with kind of choppiness, because there was already price action there that could be a benchmark for resistance and support. So when you broke this, you erupted. We've now completely retraced that, and I'm calling for a further retracement. Again, our head and shoulders pattern gives us targets of around about 13,800. So I think you're going to hit that. But I'm saying potentially you are going to go lower, and you are going to go into this period of this initial breakout, which you can see here in terms of volume on the in terms of price action on the weekly, is basically just a void. So it's no coincidence really up until here is largely a void, right? That's largely a void. There's not much price action even here. You just kind of spilt straight through it. So we could even extend this back. Not much price action at all. Why are you holding this level? Let's address that. Why are you holding this sort of 18K level? Well, it's significant. It's the prior bull market's high. You're going to have a lot of vested interest in holding this level. The issue is once it breaks, just like once it breaks here, it spills hard. And that's my concern. That's why we've been continuously coming out and fighting these bottom callers. The caliber of technicians, market technicians on YouTube is disgraceful. Also on Twitter. You know, we do not get everything right, and we've got many, many things wrong. Like I say, and I'll you know, I think humility is necessary. I actually did think that we were potentially going to enter some sort of a extended cycle theory. You know, we'd call coins like ADA from 8 cents all the way up to $3. We thought there would probably be some continuation there. It would push towards 5, 6. It didn't. We got that wrong. You know, and that's just the nature of the beast, unfortunately, with markets. One thing you can guarantee as a trader, as an investor, you are going to lose money at some point. But really, we're very focused on getting this next cycle and next sort of, you know, bull run right. And I'm here to tell you today that the bull run, this is not the bottom. This is, I can't say that with 100% certainty. And like I said, I'm not trying to predict anything here. But in my opinion, there is that double bottom scenario. You'd have had the same people calling from here. Everybody back here was calling for the bottom. Everybody. And look at what happened. And you do this actually quite often. You know, you enter this kind of area of consolidation, then you get that spill. This was a good example of a double bottom, but this was a long drawn out double bottom that was filled with accumulation and backed by volume. Also, volume on crypto, you've got to be very careful of, guys, because it's not 100% accurate. So to recap on really what I'm saying here is, are we still following the Bitcoin 4-year cycle theory? Potentially. There's no guarantees on that. You know, at the end of the day, if the Fed pivoted now, I would argue we'd see the stock market move, we'd see all markets move, and I think crypto would, if we went into a kind of after March 2020 very stimulatory environment, which many would argue can never happen again. I would say that inherently with central banks, the bubble has to get bigger and bigger and bigger before it essentially goes away. It gets royally blown up, which, hey, maybe, you know, that is the case now. I don't know. I'm not trying to speculate on that. But what I'm saying is if we went into some sort of a monetary environment, I think that we wouldn't take this sort of 2 years basing out, you know, first year of the 4-year cycle is a downtrend, then we sort of base out, and then in the third year we start to see the sign of life. I don't think it would take that long to bottom out. I think we'd really rock it. However, you know, I can't see the Fed doing that anytime soon. So does that lead us to believe that we're actually going to have another period where we have, you know, are we just essentially rinse and repeating here, guys? And are we putting in this kind of a... This is a bit of a longer video. I hope you guys appreciate this because we're really trying to get into it and help you guys navigate potentially what's going on. Are we doing something like this? And then are we going to see the 4-year cycle theory take place? I think, again, there's absolutely going to be an element of the halving that's going to be between February 2024 and July 2024 taking place. You know, the real worry for me is, do we do something like this where we absolutely spill to the downside? What could that be? Could it be the Fed breaks something? Very, very likely. You know, remember, we've still got the yield curve fallout. Again, my daily cryptocurrency market videos, guys, are 100% worth a watch. 100%. You know, or are we going to see some sort of geopolitical issue? Are we going to see some sort of a March 2020 repeat? You know, these could all be factors, or the market could just capitulate under its own weight, which is often what happens when, you know, liquidity gets dried up. But we're not here to speculate on what the event's going to be. What I am here to say is technically it looks very likely. Forget our head and shoulders for the time being. Maybe that does play out, maybe it doesn't. Head and shoulders are typically reversal patterns. However, they can occur really anywhere. It's a technical pattern that can lead to either continuation or a reversal. And I'm here to say that, you know, whilst we're holding this, we're doing a similar thing to here. We're also, and it's very, very common when you consolidate. Chart's getting messy now, guys. It's a hard-working chart. We've also did the same thing here. By the way, if you guys want to join my community, there's a link to my Patreon in the description. This is not a shill at all. You don't have to join it. We only want people that are serious about investing and trading. And we do trade every day. But you're doing very much the same thing that you did all the way down. All the risk to reward right now is, if you're calling this a bottom, you're gambling. Totally gambling. We've seen all the on-chain data get slaughtered. We've seen all these sort of bottoming indicators get proven to not be bottoming indicators, and we've still got the same people showing up calling for a bottom, absolutely battered and bruised, and with fractions of the capital that they had, and they're still showing up. And the reason they're showing up is because it's now became their career to you know, they have to sort of die on this hill. Whereas we're not like that. You know, we will, if we see genuine concern and genuine reason to pivot on our narrative, then we will. So if, again, this may be the bottom, I just don't think it is. So hopefully this video has been useful, informative, and entertaining. You know, are we following the Bitcoin 4-year cycle theory? Potentially. I think it's going to play a role. Certainly when the halving kicks in, you're going to have some sort of a supply crunch, which should increase the price of Bitcoin over time with the realization of that as we have less supply hitting the market. The other issue with that is we do actually have a lot of supply out there already, so that's going to factor in, certainly if there's mass selling. But I'd argue by the time the halving comes around, I personally believe a lot of the mass selling would be out the way. And we may even, you know, once we've had that capitulation, we may even start to see some sort of a third year take place. And I also believe on the 4-year cycle theory that it kind of goes out the window if the Fed pivot. So I think it's sensitive. But it potentially is still going to be a factor. The real risk for me, guys, right now is I think you're doing a very, very similar thing to what you did over here just before we had this big slam down. It looks too similar to me. And you could argue that this was a very long consolidation range. If you take this low, you know, you come back down, you dip a toe into it, and then you kind of capitulate and consolidate over it before you get that spill. I think from March 2020 onwards, you don't want to lose 12K, guys. Looking at volume by volume profile, you do not want to lose 12K. Because this is where all your volume is, ladies and gentlemen. So this is where all your buyers are, basically. So where the most amount of volume took place here. This is your big boys and institutions getting in. And then pumping it for the masses. And they'd have done this on the account that they knew what the Federal Reserve were going to do. They knew their next move. So I think you are gravitating towards this. I think you're consolidating here. You're going to get that spill. You're going to see 14K. You're going to see my target of 13,800. and potentially you're looking at coming down to that sort of 12k range. Maybe if things play out and coming back to this kind of area of consolidation between sort of 12k and potentially 14. So keep your eyes peeled for that. You guys make your own minds up. You know, I'm not telling you anything. I'm not trying to convince you of anything. I'm just saying this is what I see. This is a sort of longer term chart view. It's always good to recap on the 4-year cycle theory. This is the sort of analysis that I started off with. It's allowed me to make a lot of money in the crypto space because obviously we saw 2020 and 2021 coming. Even though we had saw the March 2020 capitulation event, we still maintained a very bullish stance. You don't have to take my word for it. All the videos are at the start of my channel. Also, if you want to know when we actually started to leverage out of crypto, I'm warning people, it was before 44k, but publicly, you know, we were looking at that sort of 44k range and kind of warning people that, look, this doesn't look too good here. Even though everyone was massively bullish here, you know, these marginally higher highs and the kind of situation at large, we really needed to hold. We didn't. And we said, okay, psychologically, macroeconomically, things don't look too great. All I've got for you in this video, guys, if you've enjoyed the content, a like is always appreciated. So is a comment. And I look forward to seeing each and every one of you in the next YouTube video. Make sure you smash that subscribe button. See you in the next one, guys.